the markets will jump to the wrong conclusion that we're done buying, and then we can really step it up. Because I think that the Chinese wanted to back off a little bit. I mean, they've been buying for so many months, and all of a sudden gold spikes up to a record high. It makes sense that they want to just back away a little bit and let the market breathe, let it pull back, and then resume their buying. And in fact, as I said in my last podcast, contrary to the way the markets reacted to this news, I think it's very good news.
Hey there, gold enthusiasts and financial aficionados. Today, Peter Schiff is unraveling the mysteries of the gold market like a detective at a discount jewelry store. Ever wondered why buyers are splurging on gold despite expecting bargains? Or how China's gold break turned into a market roller coaster? Strap in and join us as Peter spills the golden beans on why this bull market is anything but bull. Stick around till the end to uncover why this insight-packed ride is worth every ounce.
That gold was able to rise 2% this week in the face of not only a less dovish Powell, but also a strong dollar. The dollar index got hit pretty hard on the week. Let me pull it up. The dollar index closed at 104.8 last week, and it closed this week at 105.5. So about a 75 basis point move up in the dollar. Yet despite the strength in the dollar, we saw strength in gold. But even though we had that strength in gold and silver, by the way, although silver was not able to recover the $30 mark, it was still up on the week, and it closed at $29.63. I think, great support below 30, and I think silver is a great buy if you can get it below 30. But the interesting thing is that even though gold itself recovered everything that it lost last week, the gold mining stocks didn't recover any of last week's losses. In fact, the GDXJ actually added to last week's losses, not by a lot, but it was still down. So in other words, a 1.75% rise in gold caused a 7% plunge in the GDXJ. Yet an even larger increase in the price of gold didn't result in any increase in the price of gold stocks. Instead, they fell even further. And so what is that telling you? Because gold itself hasn't really gone anywhere. And in fact, it's holding steady at a high price. It just shows you how negative the sentiment is in the mining sector. And I have been pointing this out. This is a massive wall of worry. Even the bulls, even the gold bulls don't believe the market, at least the bulls that are investing in the mining stocks, because they're so scared. When gold goes down, they run for the hills. And when gold goes up, they have no confidence in the rise because they're worried about the next decline. So you didn't see the recovery in the gold stocks to the degree that you saw the carnage. When gold was going down, people got so scared. And this, I think, is an extremely bullish factor because you don't have the strong sentiment. It is the ultimate wall of worry. That's why I've been saying that you can buy gold stocks and gold as a contrarian, even though the price is hitting record highs, because nobody believes the rally. We're not that far off from record highs in the price of gold. Yet we've seen a substantial correction in the price of gold stocks, even though we've barely declined in the price of gold. And if you notice what's been happening in gold, it keeps making higher highs and higher lows. Yes, we get corrections when we make new highs, but those corrections don't, go down that far. So the market is consolidating at higher and higher levels as the buyers have to keep paying up to buy gold. And the people who are waiting for a return to lower prices, maybe looking at a prior low and thinking, okay, let me just try to buy a retest of that low. They don't get it. If you want to buy gold, you have to pay up. You can get a pullback, but the pullback is not going to give you comfort of being a prior low. You have to be willing to pay a higher price to get into this market because it is a bull market. But when it comes to the gold mining stocks, you get plenty of opportunities to buy those cheap because the people buying the gold mining stocks still don't understand how powerful this bull market is, because I think it's being driven in large part by central banks. And as I mentioned, one of the reasons that we got a big drop in gold prices on Friday, it wasn't just in reaction to the stronger than expected non-farm payroll number, but the surprise announcement from China that they took a break and didn't buy gold for a month. And the markets overreacted to that announcement as if the Chinese were done buying. I think that the big buyers of the week were the Chinese. I think the Chinese were able to take advantage of the fact that the market sold off on the news that they weren't buying gold in May to buy a bunch of it in June. And in fact, they're probably going to end up buying more gold in June than they would have bought in May. But because they announced that they didn't buy, they created a sell-off, which they were then able to take advantage of. Now, whether they were smart enough to figure that out in advance, to think, hey, why don't we just stop buying for a month, and then we can tell the markets that we didn't buy, and then the markets will jump to the wrong conclusion that we're done buying, and then we can really step it up. Because I think that the Chinese wanted to back off a little bit. I mean, they've been buying for so many months, and all of a sudden gold spikes up to a record high. It makes sense that they'd want to just back away a little bit and let the market breathe, let it pull back, and then resume their buying. And in fact, as I said in my last podcast, contrary to the way the markets reacted to this news, I think it's very good news that gold made a new high rather, without the Chinese buying. Because a lot of people thought, well, maybe it's only China, right? China is the driver of this rally. They're just one of the buyers, because even though China didn't buy it all, we still made new all-time record highs. And so I took that as a bullish indicator, not a bearish indicator. But one of the reasons I think that you saw such a strong gold market during this past week is because the Chinese resumed their buying. But it's not just the Chinese that are buying. It's all these emerging market central banks that are buying, because they understand what's going to happen with the US dollar. They understand what's going to happen with fiat currencies in general. And so they want to do what they can to diversify their reserves out of paper into real money. And so they're buying gold. And of course, the most over-owned fiat currency, the fiat currency that represents the lion's share of reserves, are US dollars. And so to the extent that foreign central banks are going to buy are going to buy gold, they're going to pay for it disproportionately with US dollars, which is why ultimately the dollar has the most to lose. And in fact, since the dollar just rose against other fiat currencies, that gives the Chinese an even greater incentive to use those dollars to buy gold.
Thanks for diving into the glittering world of gold with Peter Schiff. If you enjoyed this deep dive into market dynamics and want more golden nuggets of wisdom, don't forget to like, subscribe, and hit that notification bell. Drop your thoughts in the comments below. We'd love to hear your take on today's insights. Until next time, keep shining bright and investing smarter. See you in the next video.